Hey, everybody. Thanks for checking into our latest Trade of Black podcast. I am your host, Shad Dales. Happy Thursday afternoon. Last week, we heard news. Interest rates, they came down 50 basis points. What kind of impact will that have on the cannabis space and stocks heading into 2025? We're going to break down some numbers for you as to what 50 basis points means for specific companies when it pertains to their debt and the interest rates they're paying on that, as well as their tax implications. And furthermore, will we see a resurgence in small cap stocks heading into 2025 as we see rates potentially lowering even more? So with that, let's welcome in the CEO of NewLake Capital, Anthony Coniglio. Good to see you.
Good to see you, Shad. Always great to be with you.
Always great to see you as well. Anthony Varell was supposed to hang out with us here as well today, but he's dealing with hurricane weather. As you don't know if you got a chance to listen to the live stream yesterday, but I think it's getting hit hard. But a lot of wind going on down there. But it's you and I one-on-one. And I thought this was you and I had a conversation off camera about a week ago. And I thought this would be beneficial for, I think, a lot of investors in this space. And it's really an education on looking at balance sheets regarding debt, regarding obviously taxes or implications that a lot of these companies pay for. And with interest rates starting to come down, what that's going to convert to into real cash for a lot of these companies. And then really at the end of the day, understanding, is there more risk that's going to be taken in 2025 in the small cap environment and more specifically cannabis stocks? But I know you've had a few investor conferences recently. What would you say is, I guess, your top 2 or 3 most important questions and popular questions that you endured during those conferences from some of the investors that you were speaking with?
Yes, we've participated in a handful of conferences that are focused on small and micro cap investors during the course of this year. And we have a few more going on later this year, later in October and December. And why we do this is because what we found going to these conferences is investors are really surprised to find businesses like ours or to hear about organizations that are listed on the OTC or that are small cap like ours that have the kind of quality, both quality in operations, quality in financial reporting, and quality in financial results. So as an example, when you think about small cap or micro cap stocks, most of these can be found, or many of these, I should say, can be found on the OTC. And many investors ignore OTC listed stocks because it means that with 10,000 companies on the pink sheets, many of these companies wouldn't qualify to list on New York or NASDAQ.
Right.
And so what we get in these conversations with people is just tell me more about it. Wait a minute. You actually generate revenue. You generate free cash flow. Wow, that's pretty unusual for an OTC stock. Tell me more about this cannabis opportunity. And so it's a real education first on what we are and what we aren't, meaning we're not a company that failed on New York or NASDAQ and was relegated to the pink sheets. We're not a company that doesn't report to the SEC on a regular basis, that we actually qualify in all respects for New York and NASDAQ. It's just that we focus on the cannabis space. And then these investors want to understand the dynamics of cannabis, and then ultimately we get into the financials. And just specific to NewLake, they're very surprised to see a company of our size that's paying out dividends and generating free.
Okay, here's basically
but more broadly,
yeah,
I was just going to say more broadly, just the takeaway for people is there is this whole cadre of small cap and micro cap investors that don't really ever even pay attention to the sector because of where it's listed.
Right.
It's a non-starter for them. They don't waste their time. And so I think that's a real opportunity over time as those investors become more aware of the sector and dig into it and recognize the quality of these companies.
So here's an important question. I see a lot of companies that work in this space that trade on the OTC pink sheets, and then also OTCQX is what you actually trade on. Can you explain the difference between the two? Because I think there's a lot of people that just think, well, it's just a longer ticker symbol. It just trades on the OTC, but there is a vast difference. You want to explain maybe more about what do I mean by that?
Yeah, so within the over-the-counter OTC exchange, you have different tiers. The pink sheet is the one that's most notable, and many people may or may not know. The reason it was called pink sheets is back in the day when they'd list the stock tickers, it was always printed on a pink sheet, obviously before computers, when everything was distributed on paper. So that moniker is stuck. there are over 10,000 companies that are listed on the pink sheets. Many of them come to the pink sheets because they were unlisted from New York and NASDAQ and they need another exchange to go to. Some of these are shell companies that get listed because they have foreign investments and the SEC requires them to have a listing and they don't want to comply with all the SEC requirements
Yep.
to be on a national exchange. They don't want to have the governance in place. There is the OTCQX, which is where NewLake and many of the cannabis companies are listed, and there's only about 500, 600 companies on the QX. And this is what OTC created to try to differentiate the companies that are listed on OTC that do have a higher level of governance. And it's a way for them with that QX at the end of the OTC to say OTCQX. It's intended to signal to investors that this is a higher tier, or in the OTC case, the top tier
Gotcha.
of companies that are listed over the counter.
So when you go back to what you were originally saying before about how, a lot of these companies that, I should say investors, when they look at some of the senior exchanges and what some of the access you have when it comes to institutional dollars, but what would you say is the sentiment when it comes to new investors being on the OTC and some of the concerns that they have when it comes to liquidity issues? What is, I guess, like I said, the questions that you endure and how do you best handle that?
Yeah, and many of the institutional investors that we meet with, whether they be mid cap or even small cap institutional investors, they just don't invest in OTC stocks. It may be they may be restricted entirely by the organization that they work for from listing in OTC because, again, those pink sheet stocks, what everybody grew up in knowing is that the pink sheet stocks have more risk. They don't have as much governance control or reporting requirements. So many money managers will tell their staff, don't even look at OTC stocks. So that's the first thing to overcome. And in many cases, you can't really overcome it. It's a policy at some of these shops. And so in those conversations, we create awareness and we create a relationship. So
Right.
when we do move to an exchange, they're familiar with us. And I bet many of our peers in the cannabis space are doing things similarly.
Do you,
But they are amazed to find that there are these types of companies that are sitting on the OTC. And so they are keeping track of them, just waiting for that to open up.
do a lot of people assume, especially new investors in this space, assume that institutions are just not interested in these stocks, which is so far from the truth?
Yeah, I think because they've seen a lack of follow through. You don't see the trading volume for these stocks, and so I think that when you're an individual investor, you're looking at it, you're saying there is no institutional follow through here because there just isn't the volume, and maybe it happens here and there from an institution perspective. But again, therein lies the opportunity, and we've talked about it on your show before. The opportunity is for people to get in before the institutions can
Yeah.
really move into these stocks and drive volume and hopefully thus drive price action. While that's the opportunity, that's the current bane of the industry because you don't have that more robust access to capital given the restrictions that some of these institutions have because of the exchange, Ron. But there's other issues as well around custody that even if somebody did have the ability to execute an
Yeah.
OTC investment, they may not be able to get that custodied by their prime broker. So it's just yet another impediment to advancing the cause for the cannabis stocks.
Yeah, when you say, get in before actually legislation moves, like, what do you say to investors, in a lot of ways where, just the general interest and the amount of attention that a lot of these institutions, based on the connections that you have, like how much feedback have you received pertaining to the overall interest towards this sector and these stocks? We all know, yes, we need legislation change in order to uplist in some of these senior exchanges. But until then, and I know this is a question I've asked you before in the past, how much following and interest is there? Are they watching this closely? As time is ticking away and as we inch closer towards hopefully some legislation change?
In many of these conferences, for the most part, no, they're not watching it closely when we meet with these investors. Maybe you'll get a few that do, but many of the meetings we have, they don't watch it closely. We're actually excited about that because it's an opportunity to educate, and so we
Yep.
try to educate people on the entire sector opportunity. I look at those conversations and I realize that investor is not likely to execute for our company or any other company. And so what we're trying to do there is educate awareness around the entire industry as an opportunity. They may want to play an operator at some point in time. They may want to play us or others that are around this industry. All of that is really positive, we think, for the industry. So for us, it's all about how do we advance their knowledge set and the opportunity set for the industry. The other thing I would say is, in many instances, these organizations or these individuals have a story about someone they knew who got burned in from the 2021 investment cycle.
All been there.
And so I would
All
say
been
there
there,
is some
right?
scar tissue there. We have, right? But there's some scar tissue there that we need to work through as an industry and be able to articulate a coherent message on why the opportunity today is different than the higher valuations back then, and why we think there's nearer term opportunity to some of the catalysts like a Schedule 3, which many people are actually surprised that. They say, I heard something, but they don't actually know the details
No, I
because,
know.
again, they don't necessarily follow it very closely.
So do you find they're usually receptive most of the time, even though, yes, they've heard stories about people being burned in the past, but hey, you're in front of them, you educate them. I think once you get people in front of there, it's a pretty, I don't want to say easy sell, but when you can, there's a lot that's changed, obviously, since the early days of cannabis. But do you find a lot of them are receptive and they get some big takeaways after you do educate them and kind of steer them in the right direction as to where we are today?
Yeah, I do. I think for them, it's just a matter of when they think the entry point is,
Yeah.
whether it's their ability to custody or from evaluation.
Yeah.
But everybody to a person gets the long-term trend around cannabis and around legalization. I don't have to convince anybody that we are on this march to legalization. It's just a matter of when, not if. I haven't had to convince anybody that it certainly will. Everybody agrees, but people can't decide on, is that next year, is it 3 years from now, is it 5 years from now? Differing views. People don't get involved in the details of it because, again, they're not following it
Yeah.
closely, so they don't understand the growth rates. They look at growth and they say, wait a minute, I would have thought these companies would have been growing 20-30% a year. And then we get into the nuances of the state turn-ons. We talk about the red states, which is another surprising factor. When we talk about Ohio legalizing adult use and talk about some of the voter margins there, as well as Missouri, that really does open some people's eyes and say, wow, okay, maybe there really is the political will here. If you have it polling at 70% adult use across the nation, boy, I can see why a President Trump has now come out in support of
Yeah, of
this, or I can
course.
see why the Harris administration is taking positions positively around cannabis. So, again, we're not convincing people that it's going to happen because we don't need to. It's just a matter of when can they enter the marketplace, either through policy or through custody.
Yeah. It's pretty wild when you put at some of those stats as to where we are today. And when you think about people that don't follow the space very closely and where it is, I'm sure they're quite surprised, to say the least, especially when you highlight red states like Ohio. And let's face it, in the first 3.5 weeks, $44 million. I'm anxious to see what we're going to see, for a full month in September as to what kind of numbers they're going to report, but I'm sure they will be strong. Look, generation as identified is
Yeah.
basically a timeline of every 20 years. And let's face it, the cannabis space really changed the whole small cap environment. We haven't seen anything like this since the dot-com era and like 20, 25 years ago. When we look at the announcement last week of 50 basis points and interest rates coming down, what do you think is going to happen to this arena, this small cap arena, going into 2025 and with the new administration on the horizon? Do you think bigger risk will start to take place in 2025?
I do. I think it'll be slow, like unfortunately everything around this sector. Listen, 50 basis point cut is unequivocally positive for the industry,
To start.
but being able to quantify that, right? It's a start. We know that the Fed's going to move more aggressively. Well, when I say more aggressively, I'm not making a prediction on the next cut, but we know there's more to come. There was a lot of Fed speak this week about additional cuts to get to what's called the neutral rate. And so a lot of Fed governors believe that we still have restrictive policy in place, and that in order to avoid a recession, in order to avoid a deep downturn in the jobs picture, that we need to move to a neutral rate. And so they're signaling that there's 50, potentially over 100 more basis points of Fed easing to go. How that impacts the cannabis industry is
Yes.
really dependent on the company, right? It's really company dependent. Long term, a lower rate environment would say that it's a more of a risk on environment for investors, which will bode well over time. But it's going to take time for those investors to do their work and make their way into the industry. And so, yes, it could impact 2025. I'd feel more confident about it being an impact towards the end of 2025 versus the
Yeah.
beginning. But that coincides nicely with refinancings that organizations are going to be looking to do in the second half of next year to try to get ahead of some of the 2026 maturities.
Yeah. Well, let's look at like some of those maturities. Give me an example. Jushi, what do they have? 200 million on their balance sheet, if I'm correct. I don't have the number in front of me, but when we look at 50 basis points dropping when it comes to interest rates, we all know cash flow is king. So maybe break us down numbers wise as to what that converts into to give people kind of an understanding that we all know interest rates is important. But when you look at debt levels of this size, what does that then mean when interest rates come down? And like I said, cash flow at the end of the day.
Yeah, listen, I think actually Jushi is a good example to have this conversation in terms of understanding the ultimate impact of this rate cut on a company. I think most of I don't want to speak definitively, but I believe most of their debt is fixed rate debt. And so the 50 basis point cut isn't going to impact near-term financials or near-term cash flow. If they had floating rate debt, then yes. And we could talk a little bit more about more broadly the industry. So for them, with call it $200 million, if you get rates dropping 100 basis points by the next time they have to refinance, they could be saving themselves $2 million in cash flow. And I was looking at them the other day. They reported about $12 million of operating cash flow. So adding another $1 million, another $2 million to that could move that number. It's roughly 16% improvement in free cash flow. So it can have a real impact for a company like Jushi. Now, if you were looking at a company like Air as an example that has $400 million of debt, again, they have primarily fixed rate debts, nothing in the near term. But when they go and refinance that debt, if they save 100 basis points, it's $4 million of debt. In the most recent quarter, they reported $2 million of operating cash flow, a very meaningful impact on operating cash flow for them. So the impact of this really depends on the company and the size of their balance sheet and the nature of their debt. You have floating rate debt, you get an immediate benefit. You have fixed rate debt, you're going to have to wait for the refinance in order to see that flow through your financials.
Yeah, we always talk about extending debt into the future, but one thing that we always highlight as well, which is a big one, especially around rescheduling, is tax. And we all know with obviously 280E, and a lot of these companies are not actually paying for this right now. And there's a lot of unpaid balances, which, let's face it, they're paying interest rates on. Again, if you want to maybe give that example, not only towards debt, but even actually towards some of the taxes that they're paying, what's that convert into? And I think this kind of gives you a better idea as to the importance of if 280E does go away, knowing the amount of floating interest rates that they are paying right now.
Yes. And when it comes to those tax liabilities, I know there's differing views in terms of the ultimate payability of that or the requirement for the companies to pay. I know people will be challenging that in court. And I hope everybody wins their case and has to pay as little tax as possible.
No kidding.
We at NewLake, we believe right now that those are debt obligations, and we'll view them as debt obligations until there's a court that says otherwise. And so when you look at how that those tax liabilities are carrying interest expense, and it's a reason why many companies didn't pay their federal taxes, not only because they want to challenge it, but because it was cheaper, quite frankly, than borrowing back in the day, if you will, and it's continued to be cheaper. So let's talk about how the IRS calculates the interest rate they apply to tax balances. It's Fed funds plus 500 basis points. It can be 300 basis points if you're under 100,000, over 100,000, which everybody is. So it's Fed funds plus 500 basis points. Well, you had the Fed increase rates by 500 basis points. So you had companies that had these tax liabilities that were accruing interest at 5%. And then as the Fed raised rates, it went all the way up to 10%.
Huge.
Well, now as the Fed's lowering rates, it's going to bring that liability down. Now it's not retroactive, it's for the current period, but the balances today are much, much bigger. So let's take Curaleaf as an example. And TrueLeaf, they roughly, both of them roughly have $330 million of tax liabilities. So if you see the Fed bring down rates by 100 basis points, which would only be another 50, you're talking $3 million of cash that's going to be added to the bottom line. For those companies, they obviously have larger free cash flow positions, and I think they both reported something around $70 to $80 million. So it's less as a percentage than that previous example, but still $3 to $4 million benefit on those tax liabilities and you add that to the refinance rates that are going to be down. And it could generate nice cash for these companies.
Well, I think, those are good examples as far as True Leaf and Cure Leaf, but I think this really expresses a lot of interest and importance to a lot of the tier 2 and tier 3 companies, which, let's face it, there's a lot of, like, don't get me wrong, there's a lot of small cap cannabis investors that are interested in the top 5 MSOs. But I think there's a lot of people that reach out to us all the time to say, what stocks do you think have the potential biggest short-term growth? And, a lot of those companies like the Jushis, like the MaryMeds and so on and so forth, they come into play. And I think there's a lot of the questions, but you talked about interest rates regarding tax implications. Where do you see interest rates going in 2025? Like, yes, we are starting with 50 basis points, but does it all depend on what administration is obviously elected into the office? Like, what are your thoughts on that?
No, what's interesting is we've been talking about this a lot here at NewLake, and we believe what the Fed chair says, that they are data dependent. And yes, they may have gotten it wrong, but they've always been very data dependent. And there may be flaws with that approach, but they're going to look at the data to determine the path of rates. We have had a number of Fed governors this week, as I said, that believe that the neutral rate is much lower than where we are today. And I take them at their word. So it shapes my thinking to believe that right now, my best guess is we probably have another 100 basis points to go in easing from where we are today.
Yeah.
Right. So 150 total. I can't predict exactly how long it'll take us to get there. Do we get there by the end of the first quarter? Maybe. But I do think that there's going to be more easing. I think the more interesting part of this debate is going to be the slope of the yield curve, because some debt is priced off of Fed funds, or the shorter end of the curve, if you will. Some is priced on the mid curve, and not in this sector. Nothing is really priced off the long end. But what we're starting to see is we had a very flat, or at one point inverted yield curve. We're starting to see that yield curve normalize, where longer rates are higher than shorter rates.
Okay.
And given some of the deficit funding that we have in this country, and the pressure on the long end and the need for issuance, I think we're going to see that continued steepening. So as the rates come down on the short end, we could see some rates go up on the longer end. And so, that's going to shape
How is that?
investor sentiment.
Can you walk me
shape
through
risk
again
appetite.
how that's calculated?
Yeah. And so when you look at where you can borrow, say 30-day, or where you can invest in treasuries, 30 days, 60 days, 90 days, there's a set of rates for that. And then where you can invest on the long end, say where the 10-year treasury is going. And you've had a period where it's been cheaper to borrow longer, or you're getting more of a return to borrow shorter. So the long end was lower than the short end. Okay. And that's called an inverted yield curve. And so what's starting to happen now is it's normal. You look through the history of our economy, and normally you'd find where it's the opposite, where your long rate is higher than your short rate. And so you have to induce investors and give them more of a return to give their money to you for longer.
Right.
Okay. And so we were very flat for a period of time. And it has to do with monetary policy. It has to do with supply demand. It has to do with the Fed's balance sheet. A lot of factors go into it. But now we're going to see where the long end is starting to go up and the short end is coming down. And so it's not going to be where the 10-year and the overnight rate go down like this. I think we're seeing that the 10-year went up a little bit when the short end came down, and that's creating that. Well, I should use my hand this way. That's creating that angle of the yield curve.
Yeah. Well said. I will say, look, any new administration comes into the office within the first 100 days, they like to implement obviously the most important policies within their administration. Interest rates, I think 100% are going to be at the forefront. And like you said, 100 basis points would be a nice step in the right direction. But like you said, as far as the yield in the short term, something desperately that this space definitely needs, to say the least. But who knows what 2025 holds. But before I let you go, I do want to ask you one last question. I know there was one last question that a lot of your investors at this conference asked, and it pertained to small cap stocks and the ability to produce a dividend, which a lot of companies or a lot of investors always view as small cap stocks don't provide dividends. How many quarters in a row is it now for your company that's provided an increase in your dividend? Is it 8 quarters, if I'm correct?
We've increased our dividend 80% since our IPO in the summer of 21. So over the last 3 years,
Okay.
We had increased our dividend 3 quarters in a row. We paused. you don't see dividend increases every single quarter. But we have a page in our investor deck. And so we were 3 quarters in a row. We kept it steady in this last quarter. But more broadly, to your point, when you think about dividends, when you look at large cap stocks, think the S&P 500, you have something like over 3/4 of S&P 500 companies pay a dividend. And
Yep.
as you go down in market cap, you get fewer and fewer. And so mid cap companies, call it roughly 2/3 of mid cap companies pay a dividend. Of the small cap universe, which is defined at $2.5 billion of market cap, they're roughly half of those are paying dividends. And when you get below $1 billion market cap, it becomes less and less common. So at these small and micro cap conferences where these investors focus on anywhere from 300 million market cap to 800 million market cap companies like ours, they're very surprised to see that we pay a dividend.
Yeah.
And so that becomes part of the conversation, which is, and now I'm just speaking specifically for NewLake, what we explain to people is these catalysts in cannabis will occur, and that will have a benefit to our business, but you're going to get paid a nice, robust dividend. And I don't know where our stock price is today, but call it, 8.5% yield on our current dividend. So you're going to get paid a nice dividend yield while you wait for these catalysts. And when you look at the average yield of some of those mid cap and small cap stocks in the S&P, they're only paying, say, a 2% yield. So again, that's another surprise because you don't see a lot of OTC listed companies actually paying dividends.
No,
so
we don't.
It's this whole dynamic of, wow, this cadre of companies sitting on the OTC that are actually in an industry like cannabis that has a lot of tailwinds and can create a lot of value and has some barriers to investment for institutional investors that'll be unlocked over time. And that pent up demand for those shares should have a positive impact on share prices. The more we tell that story about the industry, the more investors keep track of it and look for opportunities to participate.
Just a good business model, right? I'm sure people are surprised, but when you kind of explain what you're doing, and I don't want this to sound like an infomercial, because the reality is that, let's face it, most small cap stocks don't produce a dividend, which is why it's quite surprising sometimes that certain companies that do. But all in all, when you look at a lot of these conferences that you are hosting and speaking to, what would you best describe the overall investor health of the industry moving forward?
I would say it feels to me like the current investor base is very, very fatigued. I don't think that's going to surprise anybody.
Yep.
I think there's very little money that remains on the sideline to go in and buy in. And I see people all the time who watch stock prices get adversely impacted and see it as an investing opportunity. But they just don't have the capital remaining, or they're going to bust some sort of threshold from a concentration perspective. And so they should stay disciplined. So it's just fatigue. And I think there's this group of people that are paying attention. It's a small to mid-sized group of people that are paying attention. They want to see Schedule 3 get done. They want to see the Florida Amendment 3 pass as a way to say, okay, these now are the markers where I now see that there will be tangible growth. Maybe they want to see intoxicating hemp get regulated more. So it's just some of these things where people are paying attention, they're waiting. And then there's this much, much larger group who say, I just can't do anything with this sector until I can get custody.
Yeah, I know.
Or they move to a mutual
But
exchange. So they're keeping track, but it's for them a couple of years out in their opinion.
I know, but I keep saying this, like, those are some big catalyst moments. There were some people that I spoke to the other day that they were speaking to some congressmen from Florida that behind closed doors were kind of indicating that, yes, Amendment 3 is going to go through. I hope that is the case. We will know come election night. And let's face it, whenever there's any kind of decision that's going to be made with regards to rescheduling, they're going to obviously have it within the same fiscal year as tax returns. So I think at some point towards the back end of 2025 probably seems realistic. But those two things, what do you think this does from a business aspect for the overall industry if they are implemented and approved and passed?
Well, I think if you get Schedule 3, the 280 benefits we're all very aware of. So that obviously impacts the companies positively. Amendment 3, I think a lot of people have already spoken to the companies going to be most impacted from that increase in sales and increase in cash flow. Ohio continuing to grow. I think all of that goes to bolster the the financial profile of these companies. We know a lot of these companies, as we talked earlier, have meaningful amounts of debt on their balance sheet, both in the form of borrowings, but also in form of tax liabilities. And I think it's an opportunity to see the equity valuations of some of these companies get buoyed as you bring in some of those investors I was talking about over the course of 2023, which will further be buoyed by a risk-on appetite, hopefully, with the lower rate environment. So you get all of that mixing together to create a catalyst to get equity valuations up. And hopefully we'll see operators take the opportunity to recapitalize balance sheets and also refinance that debt, not only benefiting from the decrease in the risk-free rate, decrease in Fed funds or in the reference rates like prime for floating rate, but also benefit from a decrease in the risk premium. Like, let's remember how investors price debt. They look at the risk-free rate. I could go and take my money and invest in US government bonds, or I could go and invest in this company, and I need a risk premium to take the risk of going into this company. And so what we're hoping happens in 2025 is, as the risk-free rate comes down, that we could also see that risk premium come down as operators continue to enhance the free cash flow of their businesses, continue to enhance the profit metrics of their businesses, but ultimately maybe they can pay down some of this debt, in some cases issuing equity, in some cases if they're able to generate enough cash to pay down a portion of the debt. So more healthy balance sheets can improve the risk premium, add that to the lower rates, and that creates this positive feedback loop that we always talk about, where you're just getting better and better financial profiles, which brings in yet more investors with that increased risk appetite.
Well, I think the main reason I wanted to have this podcast today is that, look, it's pretty obvious what interest rates and what they can do and how the overall investor sentiment, not even towards cannabis stocks, with the overall economy and what it means. But, I think bigger risks that you'll see more dollars allocated toward the small cap space going into next year if you continue to see some of these rates go down. But more specifically, I wanted to kind of have you break down the numbers on what it means for a lot of these companies and their balance sheets, because we all know cash is so important, especially on the short term for these companies, especially for the tier 2 and tier 3 companies. So I think it was greatly explained, but more importantly, I think, there's a lot of highly anticipated institutions that maybe aren't watching it closely, but I don't want people to think that they're not interested at all. And based on some of the conversations from the conferences you've had, yes, they are interested, but it's more, as we've always said, a custody issue right now. But let's get some things changed. But, some of those things are beyond our control when it comes to legislation. But for now, I just, hope obviously these interest rates continue to come down and we see some resurgence in the small cap environment headed to 2025.
Yes, no, I agree with that. I'd leave you with two thoughts. So somebody that that I respect highly, who's been a very successful investor, is Tom Lee at, I believe it's Fundstrat Global, in talking about small caps and thinking about the lower interest rate environment. I recently saw him on CNBC predicting, if I get the number right, I think his view is generally small caps, given the underinvestment in small caps as a category. And we're not talking cannabis anymore. I'm talking broad category. He thinks there's the opportunity that they could be up 50% as a category as you get more of this risk on mentality, as you get the rate impact on the small caps. It has a bigger impact typically on small cap balance sheets and P&Ls than it does on the large caps. And so the combination of all that, he thinks it could move small caps up 50% as a general matter. But my last thought is, we've said hope
50% going into next.
Let's all remember
going into next year
for the worst.
That's encouraging.
Yeah, going into next year, he thinks over the next 12 months that small caps can really have their day. Because they haven't had their day because of this higher rate environment is adversely impacted. These small caps tend to have more debt, just like folks in our space. They tend to have more debt than the large and mid caps. And again, when we say mid caps, think $10 billion, $15 billion of market cap. And so our category would definitely be in the small cap space. And so they'll benefit more from these decreases in rates and the ability to refinance at improving risk premiums. And improving risk appetite, which will push investors more to that small cap space or that small cap sector, looking for those larger return opportunities. So something for us to be hopeful about.
Yeah. 35 years experience on Wall Street, and I think you kind of demonstrated that here today. But I think our viewers will get some great feedback. I appreciate you breaking down the numbers. Leave some comments below. Anything that you don't understand or want to learn more of, leave comments below. Make sure to smash that like button, and we'll make sure to get back to Anthony if there's anything that you want to learn more of. In the meantime, I always love catching up with you. Appreciate, obviously, the education, and most importantly, let's keep in touch, okay?
Awesome. Great talking to you. Thanks for having me.
Thank you, sir.
Hey everyone, thanks for watching our latest podcast. What'd you all think? Is there any information that we're missing? Is there anything you want us to cover? As these industries heat up, we're getting access to more and more big hosts. So let us know the questions that you want us to ask for you. As usual, smash that like button. We want this to go viral. Click on that bell for all notifications for the latest interviews that we're doing. And as usual, let's build this community. Subscribe to our channel because we appreciate it, because we wouldn't be here without you. Thanks for watching, everyone.